We like to see bank stocks go up because that means the economy is expected to do well. Bank stocks are a leading indicator. The bank stress tests, all the banks pass. Let me explain what this means. Banks can now raise their dividends. To me, that'll bring a whole new rush of investors into bank stocks. A lot of investors, boomers especially, they're looking for attractive dividend yields that they could count on. It also allows for banks to do stock buybacks, which is good for capital appreciation. You have an amazing set of circumstances for bank stocks. Now, if we do see interest rates go up a little bit, the 10-year Treasury went out today unchanged at 1.49%. But if you see the yield in the 10-year Treasury move up a little bit, and those spreads between short rates and long rates widens, that's really good for banks too. Why is that? Because banks' cost of money is very low, and they lend to you at higher rates. Their cost of money is short-term rates. Your cost of money is long-term rates. So banks pocket that difference.